What's up guys, Taiki here, and welcome to part 7 of the Canto Thesis. Currently the price of Canto sits at 23.7 cents, and it is up, since I laid out the thesis back in September from 13.9, but I would be lying to you if I told you that I wasn't disappointed in this particular price action, especially when other coins are running and my bags are going down. Right now, Canto from local high to local low is down 33%-ish. We did see a similar type of correction back in early October when it was down roughly 29%. So maybe this is a local bottom. To be honest, this is more of a token that I intend to hold into the next bull market. So I don't care too much about short-term price action. But given that I do these weekly updates just to hold myself accountable, just so I can share my thesis with you guys, I guess it is important to an extent because price is somewhat of the validity behind a particular idea. The Canto Thesis is tangential to the MakerDAO thesis that we laid out in early July. And since then, Maker is also up a decent amount. So since early July, July 10th, it's up roughly 30%. It's also showing some weakness. And I think this is for a few reasons. First of all, we all know that the pump that, Bitcoin Ether, maybe not Ether, but, things like Bitcoin and Solana has been just pumping, right? And Maker is more of a defensive play. Because Maker, they own, let's see here, they own, $3 billion basically worth of treasuries earning 5%. And whenever those T-bills mature, it goes back on chain and it goes into buying back the token. And back in July, the majority of the people were relatively cautious / bearish. And I predicted that this type of cash flow positive play where, it's actually making $87 million a year. I think this type of asset is going to attract more capital than assets that don't have cash flow or, just purely narrative driven. Of course, if the markets are pumping, people want to chase momentum. So I kind of think that there's some rotation of capital going on where people that made money on Maker are just, rotating into things like Solana or whatever. It makes sense, right? To be honest, I don't blame anyone for doing this. In hindsight, it was smart for someone to sell Maker back 2-3 weeks ago to buy Solana. But to be honest, I'm not a great trader. I care more about longer term ideas. And if you look at things like Total 2, which I think is a good barometer of, let's say the average net worth of people on crypto Twitter, because this is the total market cap excluding Bitcoin. Sorry, this is Total 2. So Total 2 is the crypto total market cap excluding Bitcoin. So Ether, stablecoins, and altcoins. And this figure hasn't hit its local highs that it set back in August. So, it's one of those signs where I've been saying that there's not much new capital coming into crypto. And what we're seeing here might be just a short-term rotation of capital. Of course, if we do see Total 2 hit new local highs, then that is indicative of new money coming into crypto. If you look into, the stablecoin market cap, it has put in a bottom around mid-August-ish is when the bleeding basically stopped. And it's been flat since, from mid-August to mid-November-ish. And now it's picked up. So maybe this is a good indicator where, back in August, everyone that wanted to capitulate has already capitulated. But there's not new money leaving the space. Sure, there might be some money leaving the space, but it's being offset by new capital inflows. And maybe this is something to be optimistic about. So that's one point for the bulls. And another thing that, I like to share is my YouTube subscriber count. So this is for 2023. And as you can see, so these gray boxes are whenever I upload a video. And you can kind of see that, okay, for example, here or here, I lost 33 subscribers because I uploaded video. And it's kind of indicative of people capitulating, people that subscribed because they bought crypto during the Pico top of the bull market. They lost money, they capitulated, and they see my video on the timeline, and they're like, screw this guy, I hate crypto, I'm out. And it's been that way. If you kind of zoom in for, let's say, the last 365 days, we see some random spikes here and there, but generally this is pain, right? As a content creator, this kind of sucks, but I've persevered. The people ask me why doesn't it show this? Are you hiding it? No, I just don't run ads. So, I make $0 off of these videos. But anyways, but kind of zooming into the last 90 days, you can kind of see that, I uploaded video with Blur, a podcast, and I gained 29 subscribers. Maybe this is a sign, right? The early stages of a bull market. I shared my thoughts around this, right? Back in July 27th, when I said that the end of the DeFi bear market is here. And if you just look back to, the price of Ether, back in July 27th, I guess it was roughly 1900, but I got a lot of hate because I made that video and then price went down. But ever since I made this video, it was basically, this video kind of front ran the bottom in stablecoin outflows. And the entire idea behind this video was that until on-chain yields that are perceived very safe can offer higher yields than the risk-free rate, we can't have a sustained DeFi bull market. I know a lot of people got into DeFi because of the Ponzi's that we saw in the last cycle, and a lot of people don't really care about the tech; they care more about making money. And to be honest, like everyone cares about making money, but I think more fundamentally about how does DeFi recover from here? Because I mean, going back to the stablecoin market cap, the past 3 years, let's say, this is pretty sad, right? And yes, it's up like a few billion, like the past week or two, but I mean, maybe it's just a blip on the radar and it's going to continue going down. And I've been thinking like really critically about like how does money come back into the space? Because right now people can buy short-term treasuries and earn 5.25%, 5.5%. So what's the point of risking capital in DeFi? Basically, like the idea that I had was that for capital to stop leaving DeFi, I think DeFi, as a response function to higher rates, has to tokenize these treasuries and bring them on chain. And I basically said that the next bull market is going to be led by tokenized treasuries or real world assets, where this is how DeFi becomes anti-fragile. If crypto can't survive when the Fed raises rates, then the system itself is very fragile. Okay, like we can't just rely on low rates for crypto to do well. I mean, in theory, if we are trying to construct a new financial system, DeFi should thrive in a high rate, low rate, or like whatever type of environment, right? But the fact that it hasn't in the past 2 years is a sign that we need things like this. And you can kind of see this in like the RWA rankings. So you can go to DeFi Llama, Maker, right? The coin that I like is, their TVL has been up only. Staked USDT, this is tokenized treasuries on Tron, right? It's been up only. This is Ondo Finance, it's been up only. Matrix Dog, kind of up only. Realty, I don't even know what this is, but it's up only. Hashnote up only. How did I come up with this? Well, I just literally just went to RWA and I took the top 6. I kind of viewed, these tokenized treasuries. So basically, stablecoins on chain that pay a yield, or otherwise, or what I like to call yield-bearing dollars. So these are basically stablecoins that pay 5%. One of my predictions I made was that, these tokenized treasuries, they're basically going to vampire attack capital away from USDC into. You kind of think about it, right? If you hold USDC in your wallet, it pays you nothing. So I'm saying that people want to earn something on their dollars, and Circle literally take your money, and they literally like buy T-bills and keep the profit. They're actually going to IPO pretty soon, so that this could be pretty interesting. I'm quite not sure. Because if you think about it, the USDC market cap is at 24 billion. And not all of it is in short-term treasuries, but let's say 20 billion of this is in short-term treasuries earning 5%. Well, then technically they're making $1 billion a year in revenue at least. So how valuable is that business? Is it going to be launched at 10 billion, 15 billion, 20 billion? To be honest, I have no idea. But this could also be a catalyst to the RWA trade because, Maker is a similar trade, right? Like they have $5 billion worth of DAI, basically, and it's backed $3 billion of real world assets. And that's the entire thesis, right? Stablecoins are going to flow from non-yield bearing dollars to yield bearing dollars. And I thought this was a good thesis because whether we are in a bull or a bear market, let's assume that the stablecoin market cap is flat, right? Let's just assume for a fact that for the next 12 months, it's going to be at 120 billion, which is very unlikely, but just for the sake of simplicity. I still think that these tokenized treasuries can benefit because, it's all about market share, right? Like if USDC keeps being redeemed and it keeps going into things like DAI or, like staked USDT and whatnot, then, it's good for these businesses because literally all they buy are T-bills and they clip the yield. And it's very anti-cyclical. And of course, it kind of sucks when the markets are pumping. People are selling defensive assets to rotate into higher risk assets. But I also think that, it's going to be hard for the market to ignore this type of cash flow for quite some, for the foreseeable future. And I do think that Maker is going to start to get a bit again, or at least that's my thinking. I understand, people in crypto don't care about cash flow. They care more about, buying meme coins. And chances are if you're watching this video, you care more about the fundamentals because that's what my channel focuses on. But at the end of the day, if crypto can't create good businesses, then like, what are we doing here? And as soon as, something starts to make a bunch of money, I think it's weird that the market starts to just kind of feel iffy about it. But this is a Canto video. Oh, it's up 24. Okay. Well, it's up a little bit, but it's still down. Okay, I mean, look at the weekly chart. It's like, look at this. It's so sad. If this is a local top, I will be very sad. And I can already feel like even this video, I can feel the comment section guys like just angry, right? It's like, oh, like Taiki, what are you doing? Like I thought it's gonna go up. Look, I think it's gonna go up, but I don't control the short-term price action. But let's talk about like why I think it's gonna go up. And I laid this out in the first video back in September. So feel free to watch this if you want. Just to like fact check me. I try to be transparent with everything. But like I expect tokenized treasuries, aka yield-bearing dollars, to keep sucking in liquidity. Canto also launched a yield-bearing dollar note, which is paying 4.76%. And I expected, back in September that, the TVL is going to just start going up. And it really hasn't gone up, to be honest. I mean, it went from, 40 million to 60 million, which is fine. But I kind of wanted to see the growth trajectory look a lot stronger. I'm really patient with this one. I actually don't really see, okay, like maybe I don't want to be too confident here, but I do expect TVL to slowly migrate into here. They just launched 2-3 weeks ago, so it's going to take time. So I'm not, I'm not going to be like one of those people in the Discord, right? Like tagging the devs and asking when pump, when when moon, right? Look, this is still relatively a boring market. Prices are up, but it's still been a pretty boring market in the grand scheme of things. Like real alt season, right? Like if you want to talk about real alt season, it's when this, it's when this thing is like just going up only. And maybe this is the beginning of up only. And that's a good thing. But rates are still high. I still think that, when the risk rate is so high, capital is going to have a hard time just like YOLOing into non-cash flow yielding assets. And I know that might be a controversial view. And I know a lot of people in crypto just like think that, everyone has their different opinions, but that's what makes a market, right? Like, if you think I'm wrong, you don't have to buy. If you think I'm right, then maybe it makes sense to consider. None of this financial advice. Like I'm literally just like making these videos every single week, not because I want to, but just to hold myself accountable and to, I guess, talk through, where I'm at in my head, because I get a lot of questions. But that's kind of that. I do recommend people watch this video. So I recorded a 2-hour video. Whoops. Let me pause this. Yeah, so I recorded a 2-hour podcast with blur.eth. And he's one of those whales that also kind of agrees with me, which is kind of interesting. So, he owns he owns like $4 million. Yeah, where is it? There you go. He owns, he basically owns like $4 million at the maker. He owns a decent amount of Canto, and he's also doing the carry trade where you can mint T-bills and you can borrow note against it. And this is one of the bull case, right? So note is basically a stablecoin backed by T-bills. And with Maker, with Canto, I'm just very, very bullish stablecoin issuers. Why? Because they issue a stablecoin, they attract capital, they redeem USDC by T-bills, and they get to clip a yield, basically. And the reason I think more capital is going to flow in is, I have no idea why this is at 0%, but USYC is basically a tokenized treasury. I'm not actually sure what the actual yield is, but let's say it's like 5%. I think it's a little bit lower because they take a fee, but for the sake of simplicity, let's say it's 5%. Anyway, like if you want a KYC, you can, send like $100K or like $1 million to, the issuer of USYC. That's earning 5%, and you can borrow note against it, 4.76, sell note into more USYC, and do this carry trade. And anyone that is doing this carry trade is willing to pay a borrow rate up to whatever up to the risk-free rate, let's say. And in return, anyone can lend out stablecoins to these people permissionlessly. So in order for you to carry out this carry trade, you have to be KYC. But because this setup or this infrastructure is being set up, anyone in the world without KYC can earn whatever the borrow rate is, which is at 4.76. And this is not going to be limited to short-term treasuries. It's also going to be expanded to high yield corporate bonds and like other types of real world assets. So this might be like the actual bull case where through this RWA infrastructure, you allow anyone permissionlessly on chain to earn like, let's say like whatever, like 6% yield, or 7% yield, 8% yield, depending on whatever type of assets that get listed on chain. And this is how, this is something that's only available through blockchains, right? I mean, most of my viewers are American, so you might be like, oh, like I can just like buy this on Fidelity if I want to. But I mean, isn't the point of crypto to appeal to everyone in the world, not just the US? And if you start to think about it like that, then maybe it makes it easier to think about like why I like this asset, because blockchain rails are actually allowing for new types of assets to be tokenized on chain. And I do think that the next wave of DeFi, the next wave of crypto adoption is going to come from institutionalization. And right now, a lot of the focus is on Bitcoin ETF, Ether ETF, and whatnot. But I do think that the next step after that is going to be let's tokenize more of these assets on chain, have it be freely traded 24/7, have more transparency, and I think Canto is going to play a big role in that. And I also think Maker will too. Maker very, it's. I've been talking about like the Maker Ether ratio, and I guess I do. Yeah, I've been calling for parity, but it almost got there, but then it corrected. So I bought Maker like somewhere here, right? So it's still up, but it definitely feels bad, right? Like it definitely feels bad to like just like watch this pump and then like have it retrace all the way. But hey, who knows? I still think that Maker is not going to go to zero. I mean, they make so much money. It's really hard to fuck this up from their perspective. So I just like to invest in these types of businesses. I mean, maybe this is too boomer, right? But who knows? I mean, maybe that's why my channel hasn't done so hot in 2023. But this is good. This is very interesting. Okay, so that's okay. We're 17 minutes in. Sorry. The reason this video was made a few days after is because I'm still slightly sick. But if you want to check out other of our research reports on real world assets, I mean, it makes it sound like I'm a real world asset maxi, but I'm really not. I just think that it's an undercovered sector, so I might as well cover it in case it provides value. And this is all free, by the way. Right, you can go to the Humble Farmer Army newsletter because we're all humble farmers here, and we do Farmers of the Week, video reports, we do the podcast, all that. And if you're interested in premium content, check out the premium research, premium Discord below. Link will be in the description below. But Canto, let's wrap this up here. Canto, 24 cents. I'll just say 23.7 cents because that's when I first made this video. Is it going to recover? I have no idea. But I think it's a pretty simple one, right? The simple question is, do people want to earn yield on their stablecoins or not? I think people want to earn yield on dollars. Yes, you can farm random stuff, earn 10, 20% on like random farms. But look, if the TVL 10x's, then the yield is going to dilute. But these tokenized treasuries, TVL can 100x, but it's not going to dilute. Why? Because the interest is coming from T-bills. T-bills pay yield. Yield flows on chain. On-chain yield creates on-chain wealth. On-chain wealth creates more buying of assets because people have more money. When people have more money and they start buying stuff, the end of the DeFi market is here. And the beginning of the bull market is finally here. The entire idea, right? I don't think it's that crazy. I understand price is not great, but what can I do? Okay, like I'm just here making videos to the best of my abilities. But yeah, I highly recommend people watch this. He makes he has a British accent, so like maybe he's he talks about it more eloquently than I do. But we both have this similar idea when it comes to how capital flows are going to come back on crypto. I totally understand like the sentiment that people. The majority of the wealth, the majority of the capital, just wants to chase meme coins and whatnot. But there's like this 80-20 rule, right? It's like maybe 80% of people in crypto just want a quick pump and dump, and 20% of people actually care. But the 80% of people have less capital than the 20% of people, and then the 20% of the people are actually people like Blur, like deploying millions into like these types of carry trades. And I think DeFi should be building for these types of people, because I asked him a question like, why don't you buy T-bills? He said, well, like, he can't. Why? Because he's not a U.S. citizen. You know. But that's it. Thank you guys for watching. We'll see how it goes from here. Feel free to hate me in the comment section. I'm very, very used to it. And I'll see you guys another time. Bye-bye.